I love to have you on. You've got a bold perspective that you always bring. How much higher can the S&P go throughout the year now that we got this debt ceiling issue mostly taken care of? What is the catalyst to move up?
John, I know it's a key question because the stock market's up about 10% right at the midpoint, and everyone's asking the exact same question. Is this a good time to put money to work? Can I make money in the next 6 months? I think there are some reasons for stocks to actually advance probably another 10% at least into year end to get towards the old highs. First, I do think inflationary pressures, even though it's a mixed picture, are really in a sustained path downward. We're getting sort of like fluky data, but this week the used car data really pointed to inflation cooling. That's a huge weight in the CPI.
Right, and Advanced Auto Parts suggested that as well, right? And Home Depot as well, when you got, the auto part prices and the lumber prices kind of hitting them in a way.
That's exactly right. And even if this is not showing up in CPI yet, all of the commentary from the CEOs and even the Beige Book support that picture of like future inflationary pressures are diminishing. Now that's important because that means the Fed doesn't have to hit the market as hard as it did last year. I mean, that's what made last year so tough. But now we got a Fed that's slightly less hawkish. Now they have to worry about regional banks, so there's a temporary put there. And then we have to layer in the fact that there's a lot of cash on the sidelines, and I think a lot of guests today talked about that. There is an enormous amount of cash that's unallocated. Part of it is the debt ceiling. Part of it was people waiting for the Fed. But we know as a percentage of market cap, we're almost back to .com levels. So at the nadir.
But Tom, why shouldn't I believe that the optimism that you're expressing now about why the market could move 10% higher is the reason why the market is up 10% so far already, and that cash on the sidelines, cash does a lot more on the sidelines than it used to. So why should we assume that the market deserves it?
That's a great question, John. How much is discounted? Just like last year was the 27% decline, discounting a lot of the hiccups in earnings now. Fundamental investors are going to start to become a little more constructive because when you look at earnings revisions, they have bottomed, not just tech only, but rest of the market. And when we look at things like technicals, such as, price to 20-day or price to 200-day, more stocks are beginning to participate. So even though breadth hasn't been great, I think there's now a chance for investors to say there's a catch-up trade coming. Now that could come from the autos or it could come from the financials or discretionary industrials. I can't tell you it's decisive yet, but that's really why I think FANG has led. They were the first to peak, first to bottom, now really leading year to date, up nearly 50%. I think the second half is a story of a lot of other sectors catching a bid.
Well, is it FANG? Because remember that N in FANG stands for Netflix, not NVIDIA. And NVIDIA has just been an amazing mover this year. I mean, I don't even know how much. I stopped counting really at 150%. It's up it's up a lot. And
right.
AI has been a big mover in general. So is it the big stocks have continued to do well, Apple, Microsoft, et cetera, but this AI trade has been crazy. Might that argue that there's enough enthusiasm in the market already and there might not be that much more?
Yeah, well, it's a great question, but keep in mind, NVIDIA wasn't even heavily shorted into their earnings print, and they revised forecasts really by 30%, and that's the stock move. AI is something the Fed would like to see continue to actually expand because that contains inflationary pressures. Like, if you think about the Fed being hawkish and what they're worried about, they're not really worried about AI growing because AI takes away inflation pressures. I almost think that the Fed doesn't mind that FANG stocks are rising. I think stocks like Netflix and even Amazon, which have been sort of the tail end of the FANG, are also the parts of the FANG that could really start to power a bigger move in tech and discretionary. I mean, I think they're starting to look like even Tesla, like they're beginning to participate. And again, that would strengthen and add breadth to the market.
Sure would. Well, I love to hear your pure perspective on what could go right here. Tom Lee, always great to have you. Thank you.
Thanks, John.
Speaking of Pure Storage earnings are also out.